What if I told you the RBI and the government are setting up the stage for the next big rally in your NBFC stocks, and most of the retail investors are missing it, and the interest rates are falling, the liquidity is surging? Could this be the start of the next NBFC rally in the next few years? Stick around because I'll also share the top NBFC stocks analysts are betting on. Hey everyone, welcome back to MacWin, your channel for all your financial insights. Today I'm diving into how RBI's latest moves and the government reforms could completely reshape your future of NBFC stocks. Let's break it down. The RBI has cut the repo rate by a full 1% this year. Earlier it was 25 basis points in this February and April, and followed by a 50 points in the June. So that brings the repo rate from 6.5 to 5.5%. On top of that, the cash reserve ratio has been reduced by 100 points. So infusing roughly around 2.5 lakh crores into the system. So what does this mean? So that leads to a cheaper borrowing and more cash for the NBFCs to lend. So this leads to your lower cost of funds, which is your higher profits. But there's more. The RBI has also relaxed your gold loan norms. So raising the loan to value from 75% to 85%. So you'll be able to utilize the 85% of your loan amount. So for microfinance NBFCs, the quality asset threshold has been reduced from 85% to 60%, letting them expand into newer or more profitable segments. So that gives them a free hand to explore new business ideas. And why it matters to the NBFC stocks and why should you care? Because the lower repo rates reduce borrowing cost, which widens the net interest margin or the NIM for NBFCs. So which means there are more liquidity and more lending. That means higher profits. So your repo rate increases, the cost of funds reduces, and your NIM and the profits increase. So analysts expect the cost of funds to improve by another 20 to 40 points by this financial year 2026. Plus there are new cleaner regulations, and there's a shift based towards your risk management supervision for all your well-managed NBFCs. And there are new digital lending rules which supports legit players over unregulated apps in the market. And there are new norms that encourage you for a credit flow through NBFCs to priority sectors. In short, the environment is being fertilized for quality NBFCs to grow and be safer in the market. So the next question that comes to your mind is like, which NBFC sector benefits the most out of this? So let's chalk the winners here and who will be the best profitable segments into this to ride this wave. So the first NBFC would be your housing finance NBFCs, which means like cheaper loans, which makes like more home buyers get into it. The government supported schemes like Housing for All add fuel to the fire. So think of companies like PNB Housing, Canfin Homes, Repco Home Finance, all of these are going to be benefited. In fact, Canfin Homes have been observing it for the past 6 months. They have been topping the charts #1 in their results as well as in their growth and consistency. Then comes your gold loan NBFCs. So with the LTVs raised, the players like Muthoot Finance, Manappuram Gold, they can also issue like bigger gold loans against the same gold. And that's like adding up weightage to the next set of NBFCs. The third NBFCs are your microfinance institutions, the MFIs we call them. The lower qualifying asset threshold gives them the flexibility to diversify, and many are eyeing for affordable housings and SME lendings. And there are like consumer finance and BNPLs. So we have companies like Bajaj Finance, Tata Capital, Cholamandalam Finance. All of these benefit from your digital credit demand and is more supportive towards the lending framework. So the sectors that could benefit from this would include your housing sector, your gold, your microfinance, and your consumer finance. Which NBFC do you think is a dark horse? Just let me know in your comments below. And below is a list of analysis examples. And because you could see that Aditya Birla Capital, they have 20% of loan growth is from their NBFC arm. 69% to be precise is from their housing finance year on year. And the price of the share is roughly around 281. The expected ROE is roughly 14% for the financial year 2027. Then we've got Aptus Value Housing. They've got a very strong AUM and they have got higher capital adequacy over 70%. They're running around roughly 320 rupees now. Then we've got like Punjab Housing Finance. They've got the net profit of over 25.3% year on year, and the 70% of the borrowings are floating rate. So they're roughly trading around 1104 rupees. Then we've got like Shriram Finance. They're currently mute, but analysts expect a strong market recovery from them, and they're roughly trading around 696. And if you could see that there's a huge buyer rating from this, you could see Aditya Birla has got like 9, Aptus has got 11, PNB has got 10, and Shriram Finance has got 28. So these are like the top trending stocks in your NBFC sector. I know it sounds like a dream, right? Because everything seems to be all rosy, but here is the catch. If the credit demand doesn't pick up, the rally may take time to get kick-started. That's one of the things that you have to like take care of this. The NPAs are like one of the bad threats to all of these NBFCs, the non-performing assets. If that spikes up, then the unsecured lending industry would automatically collapse. And there are over-leveraged NBFCs are still vulnerable to your rate shocks. So you have to be very careful on choosing up your NBFCs. And there are regulatory scrutiny always remains high, especially on unsecured and digital lending. So not every NBFC will win. Pick names with strong capital ratios, a healthy ROE, and a focused lending model. So if you're a long-term investor, this might be just your early entry signal. The tailwinds are real, but the gains will start showing up meaningfully only by the end of the 2025 year and beyond that. So look for NBFCs with higher credit ratings, low cost to income ratio, and a strong presence in housing, gold, and consumer finance. So do you think the NBFC stocks are the next big thing for the years ahead? Drop a comment with your top pick. Aditya, Birla Capital, PNB, Aptus, Shriram Finance, whatever it is, just name your pick. Leave your comments. I would love to read what you guys come up with. And don't forget to like, share, and subscribe to this video for more such deep dives into the India's most exciting investment trades. I'll see you on this next week. Until then, stay tuned. Thank you.